Hi there, welcome to Kneppy Invest. It's always exciting to be looking at a new company. Well, not a new company, but a company I haven't looked at in the past or featured in one of my videos. And that company is Sensen Networks. And I haven't really looked at this company until I saw their June quarter results for financial year 22. And it did pique my interest. So I had a closer look at the company, and what they do is quite fascinating, and I can see the potential for significant growth over the next 5 to 10 years. And one of the reasons their June quarter results did pique my interest is just the growth in receipts from previous quarter. Now, the company is not operating cash flow or free cash flow positive just yet, and they really haven't reached scale just yet. But I think there is that potential in the next few years that we will see this company significantly increase their cash receipts, their revenue from what we're seeing now. They have some very impressive customers or clients in their client lists, including quite a few big cities around the world. So let's get stuck into the video. But first thing we should touch upon is exactly what Sensen Networks actually do. Now, when I first start researching a company, the first step I usually take is to go to the company's website. And if I can't find what a company does on the website, or if it's obscure, vague in what the company does, that is usually a red flag. I then also have a look at any presentations the company has released, because the best way the company's management can market that company is through presentation. So usually in a presentation, you will find at least one or two slides in relation to what the company does. And I went back to May, and Sensen had released a presentation, and on slide 7 of that presentation was this nice little slide here with a perfect description of what the company does. And what the company does is they take information from sensors. So we're talking about cameras, smartphones, LiDAR, radars, other sensors, including control signals. They take the information from that, put it through their multi-sensor data fusion platform, and they provide accurate and actionable insights in real time to their clients or their customers. And it seems like they provide products and solutions for a wide range of different types of organizations. So we're talking about councils, and talking about councils around the world, including Brisbane City Council, Calgary, Chicago, Edmonton. Those are the 4 councils I can just think of right now. And they provide quite a few products and solutions for those particular councils, particularly in terms of traffic and traffic management. So we're talking about road safety, traffic analytics, curbside management, parking management, and civil compliance through their products and solutions. They also help casinos, Sendgame, that is talking about table game analytics, surveillance, and also retail and sports AI. One of the things I was reading about on their website, and the company does have quite a few case studies on the website, was about fuel theft reduction. So it seems like in retail, they are focused on decreasing theft for not only for service stations, but also other retail companies. Now, in this particular slide, I'm found on page 11 of that particular presentation. I just like this particular slide for 2 reasons. It shows you some of the clients they do have. Now, they have a more comprehensive list of clients in another slide in this particular presentation, but also how they derive their revenue on the right-hand side of this particular slide. So on the left-hand side, we have just a select group of some of their customers, including City of Las Vegas, Calgary, Shanghai, BP, Logan City Council, New South Wales Government, Snap, City of Chicago, City of Ipswich, Crown. And then on the right-hand side, 60% of their revenue is through software license, SaaS annual recurring revenue, 20% of the revenue is through hardware, and 20% of revenue is through professional services, upfront and ongoing, technology, trials, solution design services, software installation and configuration, software customization services, and UAT support. So a majority of the revenue is through SaaS annual recurring revenue streams, and that would be probably attractive to quite a few investors out there. Now, to some other facts in regards to Sensen. This company was founded in 2005, and the company was founded by University of Technology in Sydney, one of the professors there, Subhash Challa, and he was probably an expert in this sort of area. And this company was spun out of the University of Technology in 2005, listed on the ASX on the 18th of October 2017. It was a backdoor listing via Orpheus Energy. I've never heard of Orpheus Energy. Had a quick look at that company. Seems like Orpheus Energy had something to do with uranium, but a lot of companies back between about 2014, 2017, a lot of companies on the ASX now became an ASX listed company through the backdoor listing channel. It was fairly popular back then. And the current CEO and founder of the company is that Subhash Chala. He has a 5% stake in the company. The largest shareholder by far is Equity TS. They have a 21% stake in Sensen. And the current market cap of the company is 52 million. That's at a share price of 8 cents. And when we look at the chart, you'll see and notice that 8 cents is the lowest or near the lowest share price we have seen for this company. So potentially right now is an attractive time to take a position in this company, particularly because of what we just saw in the June quarter. And the ticker code for this company is SNS. Now to the June quarter results for this company. And before we have a look at the June quarter results for financial year 22, just want to go back 1 year, have a look at the June quarter results for financial year 21 and just see how this company has progressed in the past year. So in the June quarter financial year 21, receipts to customers 1.6 million, and the company was operating cash flow negative by 1.2 million. So this company was burning cash. Wouldn't call $1.6 million in receipts fairly high. In fact, if you look at staff costs in this particular quarter was $1.6 million. So the majority, actually all their receipts, was going to employ their staff at this point in time. Now, the company at this stage had $5.2 million of cash on hand. So you'll probably say 1 year ago, more than likely, they would have to raise capital eventually, particularly because they were burning through a fair bit of cash. Now, to how the company has progressed over the past year, and receipts from customers has climbed a significant amount. In fact, it's more than doubled from 1 year ago, up 2.1 million to 3.7 million. Now, when I see receipts growing like that, the next thing I want to look for is how has spending increased alongside that growth in receipts. I want to I want to really see receipts growing at a quicker rate than their spending. So is that true for Sensen? Well, product manufacturing and operating costs up 800,000, staff costs up 900,000, and administration costs up 500,000. So those three combined have grown at a greater rate than the increase in receipts by a very small amount. And that means because spending is growing at a greater rate than receipts, the company is still operating cash flow negative. In fact, the operating cash flow negative by a greater amount this quarter than 1 year ago. The only thing, and the only reason I'm doing this video today, is just that growth in receipts is really intriguing for me. Potentially, they have reached a fairly important inflection point where we're going to see a rapid expansion in their receipts, in their revenue over the next few years. Another troubling fact for me is the company did borrow $1.5 million. So they're increasing their borrowings, their loans. It's up to 1.9 million. I would prefer a company like this, when they're in this stage of their life cycle, not to be borrowing too much money, particularly if those loans have a high interest rate attached to it. So overall, because they are burning through a lot of cash, but because they did borrow 1.5 million, the cash on hand actually grew from the March quarter up to $5.8 million. But the only reason it did grow was because they borrowed $1.5 million. Now to the cash receipts history for the company, and the one reason and the main reason I decided to do a video on this company was just the growth in receipts we saw from the March quarter to the June quarter. Receipts doubled from 1.7 million to 3.7 million. Now that could be just a one-off. It could be just timing of cash receipts. The company was fairly unclear in their commentary in regards to why there was a significant increase in receipts from 1 quarter ago. Sometimes when you do see that sort of increase in receipts, it's because of an acquisition, something like that. But again, I did not find any reasonable explanation to why we saw a significant increase in receipts. But this company is growing. In fact, the company has increased their cash receipts by tenfold over the past 3.5 years. From the December quarter 2017, $350,000 receipts. Now it's up to $3 1.7 million. Something else to take into account here is they did mention in the commentary they are decreasing their cost. Now, that can be concerning, that the way they're going to become operating cash flow positive or even free cash flow positive is to decrease their costs, because they are not confident that receipts will be able to grow or revenue will be able to grow in the future. So I would prefer a company to become operating cash flow positive, free cash flow positive, by increasing their receipts at a greater rate than their spending. If they can become operating cash flow positive just by decreasing their cost, and if receipts remain steady or even decrease, that will be a negative sign for me moving forward. So I'd like to see receipts at least stay elevated at these levels or even increase from here. And if we see that, along with cost decreasing, this company will become highly operating cash flow positive on an ongoing basis. But I have to see that for myself in the next few quarters. And as we take a look at the chart for Sensen, this is the weekly chart going back to the start of 2018. The market is not yet convinced about the future of this company because the share price is nearly at an all-time low. In fact, the all-time low for Sensen was reached during the COVID-19 financial panic. Share price fell below 6 cents for a brief period of time during March 2020. Now, just after the company did go through that backdoor listing, there was a little bit of hype in this company. Share price reached a high of 25 cents in the first few months of 2018. Then we saw that pull back in the share price. And then during the later period of 2020 into the start of 2021, there was more hype in this company. You just see that share price rise quite quickly from about 10 cents to 25 cents in about, we'll say, 2 months of trading during December into January of 2021. Share price went back up to 25 cents. So 25 cents looks like it's a fairly strong resistance level for Sensen moving forward. But share price right now is a long way from 25 cents. If the share price has been falling for the last 2 years or so, and the share price is down towards the all-time low of around 6 cents. So currently the share price is 8 cents, and there's no end in sight to the decrease in share price for Sensen. So if you are bullish about the future of this company, now could be a good time to take a position in this company, simply because how depressed the share price is right now compared to how high the share price can get if there is a little bit of hype in this company. And that's all I have for this first look at a company called Sensen, an interesting company. We have seen significant growth in the cash receipts over the past year. We need to see this, or I would like to see this momentum continuing in the next few quarters. And if they can continue this cash receipt growth momentum over the next few quarters and decrease their spending, this company would look even more attractive than it is right now. If you have any questions, any thoughts, please leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.